Insurance agents from around the world, welcome to the Insurance Guys podcast, powered by HawkSoft. God, I love HawkSoft. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, he's a $7 million bull rider out of Mobile, Alabama. Ladies and gentlemen, please put your hands together and welcome the incomparable Mr. Bradley Flowers. How are you, Bradley?
So our friends Aaron Robertson, David Carruthers, and Daniel Song and Grayson Carruthers are on this vacation that's never going to end.
Never.
They're in Alaska. And I texted them that the other day. I was like, dude, I feel like you guys have been on vacation for a month. And Daniel sent me a photo last night of a laundromat. And he said, these fools have been here so long, we're having to do laundry.
Man, wow. I mean, it just never ends. I don't even have time to go to the bathroom during the day, and they are on a 17-week vacation in Alaska. 23 hours of daylight, if I'm not mistaken, in Anchorage, Alaska.
Like
if I'm not mistaken, and there's going to be somebody tell me how wrong I am, if you're on the east coast of Alaska, you are 55 miles away from Russia. Did you know that? Rand, did you know that? 55 miles. Folks, we got a special podcast for you today. Bradley and I, this is something we've been wanting to do for a while, but we're going to do our what I call news and notes in the insurance industry podcast today. And what I think what he's wanting to do is we're going to go through some of the most recent news articles related to things going on in the insurance industry. Bradley is going to read the questions or the comments or the news article, and then he and I are just going to talk about it. And, now, there's been some changes to this, I believe, in the past 24 hours, as a tropical storm has now hit Southern California. As somebody said on the news this morning, who in the hell would have had flood insurance in the desert? So I don't know what's going to happen out there. Also, there's about 3 more tropical storms out in the Gulf of Mexico, or not Gulf of Mexico, but what is that, Atlantic Ocean?
The ones in the Atlantic are going to turn up and stay east of the United States.
Agreed.
There's one going to enter the Gulf, but I think it's going to hit Texas.
Yeah.
Or northern Mexico.
But my point in saying that is it's always scary this early in hurricane season when you start seeing stuff going left and right because you're just waiting on the one that centers you. You know what I mean?
I don't know that it's early, though, is it?
The middle of hurricane season is September the 10th. So, it's...
And then it ends in November.
Correct.
Late November.
Correct. Yeah, that one
I feel like it's been kind of quiet.
Yeah, that one that hit Florida last year, the big one, what was it, Ian or Ivan or whatever it was? That was super late. That one was like we were almost out of the woods, and boom, it hit and went right through the middle of Florida and did all that damage. But, Bradley, what you got for news and notes today?
So the most important thing, the biggest news, I think, is what went down with Hippo this last week. And Sheffy Ben Hutta from Coverager wrote a great article called "The Many Faces of Hippo," and kind of took us through the journey of Hippo. Mm-hmm. And let's fast forward a little bit. 2019, there was an article how insurance startup Hippo built a company worth $1 billion. Detailed the company's early days from initial $14 million seed round to its then $100 million Series D round. The paper unicorn, which is a funny way to say that, operated with a lean team of about 25 engineers and a staff of 200. With a $1 billion valuation, Hippo's main focus shifted to customer acquisition. Its then direct-to-consumer strategy was built on 3 pillars: policy, technology, embodied in a smart home kit, and service, enhanced through the acquisition of Shelter, who I think was started by Andrew Wynn from Ascend, if I'm not mistaken, which is a home maintenance service. It was an attempt to splatter a modern narrative and stand out against Farmers and State Farm, but in a landscape cluttered with promises, Hippo was just another promise. In 2020, Hippo set out to acquire Spinnaker Insurance Company, a PNC insurer with a national license and an A rating from AM Best. So Hippo owns Spinnaker.
Hold on just a second. You said something about shelter. Now, shelter insurance.
It's not shelter insurance. It's,
Okay.
it's SHELTR.
Gotcha. Okay.
But Hippo owns Spinnaker, which I thought was interesting from this. This arrangement envisioned Hippo maintain its role as an MGA, with Spinnaker underwriting as a portion of premiums while retaining its independence. The move paved the way for Hippo's venture into public markets the following year when it went public to a blank check company in the summer of 2021 at a $5 billion valuation.
By the way, through this whole story you're telling right now, because currently you're boring the spots off a giraffe.
We're getting somewhere.
You lost me at about the second line of that.
Well, we're getting somewhere. Hippo navigated a turbulent path in its Q2 2021 filings. The company reported a 101% year-over-year increase in total generated premium, amassing a total of $159 million. They expanded their footprints in the 3 new states. Let's see, move forward. Hippo rolled out inspection protection, an insurance product for homeowner associations, which it shut down a year later. Shocker. In distribution terms, 58% of the new premium originated from independent agents, which was surprising to me.
I don't even think we sell Hippo in my agency. I don't believe we do. So what's the core? What's the meat?
So here's the news. Here's the news from Hippo.
Here we go. We're about to get to the news.
Last week, Hippo shut down for new business in every state in the country.
Wow.
And there's a lot of speculations as to why they did that. Mm-hmm. And I'd love to get your thoughts, but a lot of people see it as, hey, this is D-Day. This is not good. Anytime a carrier shuts down for new business in every single state all at once. And it's not a nationwide situation where it's like, hey, we're making it harder to write new business. It's like, hey, we're not taking any new business at all. And then, of course, Hippo is maintaining that it's not that they're just trying to slow their growth. But curious what your thoughts are on that.
So here's my thoughts on what's going on, because I've heard different variations of the same story with just about every carrier that I have talked to or that I have a relationship with. I think that all of these carriers, and it kind of started back, I don't remember if it was like March of this year when Geico announced that they basically were throwing the emergency brake up on all new business with Geico.
California.
You remember that? Nah, it was not just California. It was a bunch of states. They were shutting all their retail stores down in California. But it included a number of states. And I think what all of these carriers are doing is, because of inflation, because of the cost of reconstruction, because of the cost of fixing automobiles and labor and the cost of reinsurance and the issues with getting reinsurance and all these other things that are going on. Remember, guys, I call it a pot of chili. A lot of these carriers have realized, oh, shit, we are not charging enough for insurance. And I know for a fact from talking to different managers with different, I'm talking C-level suite executives with different carriers, in a lot of states, I'm going to throw California under the bus once again, they literally know what they need to charge to get back to profitability, but the state says you cannot charge that. Right. We will not let you charge that.
So this is CEO Rick McCathron's statement. As we stated in our Q2 earnings, Hippo is fully committed to near-term underwriting profitability. These actions are temporary as we evaluate catastrophic risks, geographical diversification, enhance underwriting and rate actions for the Hippo Home Insurance Program, HHIP. These changes do not impact our insurance as a service or service segments. We look for continued growth in these areas. I think the bottom line is kind of like, who was it that we insured recently, or that we interviewed recently? Andrew Coral. These newer insurtech carriers, while intentions are good, it's hard to adequately price things based on an algorithm when you don't have 100 years of data to back it up.
And even the companies that do have 100 years of data are still saying, slow our roll, go back, figure out, maybe we're wrong too. Maybe we need to increase our prices. So they're all trying to slow down new business growth to get with these Department of Insurance and figure out a way to charge what they need to charge to be profitable. Now, that hurts. It does. I shouldn't say hurts us. It does hurt us because we all love to write new business and we're growing. And instead, every carrier in our agency seems to be saying, guys, we really don't want you to write very much business. We want you to write the really, really, really good stuff, the really new stuff. But other than that, don't.
Well, I think part of their problem too, based on what I've seen, we weren't appointed with them, but we accessed them through Appalachian Underwriters. You can access them through a lot of MGAs. And the few times we quoted them, I don't think we had any business on the books with them. Like I quoted my house, and I remember, so I live in a 1,400 square foot house. And my insurance is $2,000 a year, which is high down here for a house of that size, but coastal region. 1980 frame house, gable roof, and Hippo quoted me at $700 a month. So $8,000 to insure my house. So 4 times what I'm paying. And so with limited underwriting after the fact. So I think personally, just based on what I saw as an insurance agent, there might have been a little bit of an adverse selection going on, whereas, some agents or just in a direct-to-consumer situation, which you definitely get adverse selection in direct-to-consumer situations. I think direct-to-consumer home insurance carriers, you are a magnet for people who have houses with issues, whether it be repair issues, roof issues, claims history, that sort of thing, because a lot of times those folks are too embarrassed to go to an agent and say, hey, I've got a hole in my roof. Right. So they're going to go online. And so
is that insurance fraud, though, when they go online? I jokingly tell people all the time, folks, we can't even be trusted to put our correct weight on our driver's license. You really think somebody who's looking for cheap homeowners insurance is going to tell the direct carrier, online carrier, the truth about the claims or the big, basketball size hole in their roof? No, they're not.
Well, I think what happens in a situation where you have a carrier that's overpriced but will take some things is you end up with a lot of really bad risks.
Right.
The good risks, and I like to think my house, new roof, I mean, it's a good risk. We've got good credit, all that sort of thing. So I think that's partly, almost think they overpriced to a degree for a product that's no better. You look at like an Openly. Openly is overpriced compared to other carriers. However, it's a much better policy than just a standard HO3. So that's my theory is what's going on. Whether it ends up being a permanent change or temporary, they're saying temporary. I highly doubt that, in my opinion. Yeah. But
so I have a question for you, Bradley.
Sure.
You are much smarter than I am, so you're going to know the answer to this. Yeah, I'm talking to our branch marketing rep last week, and we were talking about she calls me and she does the thing where she's like, hey, just wanted to go over, kind of what's going on at branch. And
that's another one
she said, well, we're just like everybody else right now. We want to write the unicorns. And now let me explain what she means by that. No claims in the past 5 years. Only wants houses 10 years or newer, high credit score, no claims, and I think there was one more. And this was for home and auto. But she led the conversation by saying that. I start asking her questions and come to find out, in the state of Alabama anyway, Branch does have their own paper. But in Alabama, the way that the Department of Insurance is set up, and this, I would venture to guess it's probably like this in most states, but maybe not all of them. The state of Alabama's Department of Insurance says before we let you sell policies on your own paper, her words, not mine, you have to, for some period of time, be, air quotes, you have to be seasoned, I think is the term she used, seasoned. So until this time period elapses, I don't know how long that time period is, how many years, they have to sell branch policies in the state of Alabama on other paper. Is that kind of how all of these branch, Hippo, Lemonade, is most of the time it's on other paper?
1,000%. Most of your InsurTech carriers start on someone else's paper with a fronting carrier and that sort of thing. And then I think most of them, their ultimate goal is to move to their own paper.
Correct.
Now, I've seen agents in IOA that are unfamiliar with, more catastrophic areas, like freak out about this. It's no different than you going to RPS and then placing a policy with Westchester or Western World or what, you know what I mean? It's no different than that. It's just they're acting as an MGA.
I was about to ask, that was the question I was going to ask. Are these Hippo Branch type companies, until they can become seasoned and use their own paper, they're really nothing more than an MGA that's
correct,
got a really cool quoting platform?
Correct.
Is that
correct?
And the other thing I've noticed about a lot of those types of companies, Bradley, most of them, and you can correct me if I'm wrong about this, you don't have an option openly, I think the same way, of like putting them on your PL Rater or your Turbo Rater. You have to go to their online quoting platform.
Some of them you do. That's not necessarily true. Openly is on some raters, as well as Branch is. But there's some. There's a few carriers we work with that are like, hey, our baby's the prettiest.
Yeah.
And, everybody thinks their kid's special, and they think their rating platform is special. Therefore, they're not going to work on any raters.
She told me that they were not available on quoting platforms, and that I needed to tell my staff to put a sticky note on their computer monitor that says, make sure you quote with Branch if it's a unicorn.
So funny
if
that
it's a unicorn.
A technology company that has phenomenal technology would tell you, put a sticky note on your computer. That's hilarious. Yeah,
you see what I'm saying? You get used to going to PO Rater and you go, oh shit, I forgot to go to.
Well, it's funny. It's funny because
I don't think we have openly on our PO Rater.
Openly, I think, is just on Easy Links. I don't think they're on PO Rater.
Okay.
They're working on a quote API. I've been following up with them on it. Mm-hmm. So it's funny. I went round and round. So Branch, when we originally got appointed with Branch, and I'm a fan of Branch. I like Steve. Their technology is unbelievable. When we first got appointed with them, I had a rep that told me, if you're on a Rater, we're not going to appoint you. Exact words verbatim.
This was Branch?
Yeah.
Okay.
Well, 2 years later, that same person argued with me on LinkedIn when I told somebody Branch is not Rater friendly. They're like, "Oh, we love Raters," and so they've kind of rode the fence a little bit with that Rater category. But shifting gears real quick to something a lot more.
Hold on, before you get off that subject.
Before
you get off that subject, I want to tell these agents this: isn't Branch the carrier MGA really that has the technology in their quoting system where they actually use some form of AI, and if you just have like name and address, it pulls a pretty damn.
I don't know that it's AI, but they have some significant amounts of data that they can pull on somebody just based on like name and address. Because I've even had them pull mortgagee clause and loan number.
Yeah, I remember you telling me one time, and I don't remember if it was on or off the podcast, and you can edit this if you don't want people to know it. You said that with your people here at Portal, you guys actually quote Branch first to get a bunch of this information and then go quote with like your Rater or whoever else, because you're getting more
We're trying
info.
To place business with them too.
Absolutely.
I think the reason that a Branch does have all that data, part of it is that you will give them a shot. So
correct.
But yeah, absolutely. So shifting gears a little bit to something a little more entertaining. This was referenced yesterday. This is from Insurance Journal. And every insurance agent can probably relate to this. I know you can. So here's the title of the article. Police respond to chaos as Florida condo owners outraged over insurance fees. Shouts, shoves, and chaos broke out, and police had to be called when condominium owners at Pembroke Pines, Florida, of course in Florida, objected to being shut out of an association meeting called to discuss higher fees due to spiking insurance premiums. Fortune magazine and WTVJ TV News reported that hundreds of residents showed up for the meeting at Century Village condominiums last week, but many were turned away and the doors were locked when officials said the meeting room was full. That's an issue. One resident said that a security guard forcibly threw an elderly gentleman to the curb like a rag doll, exact quote. More than a dozen Pembroke Pines police officers were called to the clubhouse. I'm picturing a bunch of people in like seersucker suits and Sperry shoes fighting each other. The condo owner said they were outraged by a recent notice from the condo association that fees would climb as much as $200 a month and possibly more to cover property insurance premiums as the latest fallout from Florida's property insurance crisis, which has led to a dozen insurance insolvencies in the last 3 years and huge premium increases for many homeowners across the state. While Florida legislature late last year and early this year approved major new laws, blah, blah, blah. The Century Village residents, many of them retired, said the new fees are on top of a $700 in existing association fees. The costs are forcing some owners to sell and move out as soon as possible. No surprise there.
You said it best 6 months, 8 months ago when all of this was going down on the podcast. Your exact words were, can Florida homeowners, people that are having to pay for insurance, hold the rope long enough until it turns back around? And obviously from that news story, they cannot.
Well, a couple things. The changes that the Florida government imposed 6 months ago, whenever that was, were mostly good things that I agreed with, that you and I had covered prior to that of, hey, this is how you fix the Florida, this is how you fix Florida insurance market. The problem is, and I'm talking to consumers here, anything with insurance, it takes a year or two to take effect for you to see the effects of that.
It's like turning the Titanic.
You've got to hold on long enough and be patient. And I'm just going to be honest with you. You know, we had a condo association that renewed, and I think I think they imposed a $2,000 per member assessment, which is basically what these folks got.
Sure.
They need to be thankful they got a renewal.
100%.
I mean, not to be the big bad insurance guy, but I mean, there's a lot of condo associations and homeowners associations now that just plain aren't getting renewals. And now my bet is, a lot of homeowners associations and condo associations are ran by people that like power. Like my mother-in-law the other night was going to an HOA meeting, and I'm like, I don't know that I would even go to an HOA meeting.
1,000% I wouldn't.
We're building a house right now, and we are not physically inside of a subdivision, but legally we are in this subdivision, so we do have HOA fees. And I'm like, I don't even know that I would even go. But you've got these people who are the type of people that like serving on boards and like being in charge. And a lot of times these associations are ran very poorly, in my opinion. And so my bet is it's not just the insurance cost. The insurance cost in this situation were, and I don't know anything about the situation other than the article, were just a straw that broke the camel's back. 100%. And there's probably some other decisions these association leaders have made that led to increased fees and this $200 a month. Because let's face it, I mean, you're buying a nice condo on the beach, you can afford a $2,000 assessment. You know what I mean?
Yeah.
So, but I think it's hilarious that it turned into Frankenstein with the pitchforks.
So when does Florida turn around then?
Man,
and do these states like Florida and California now the
California is a whole different
the California,
I think Florida has a greater chance to turn around than California.
100%. They've
already.
already.
I don't think you don't have the crazy not to get political. You don't have the crazy politics in Florida like you do California.
Yeah. So in California, I know for a fact that agents are using the comment that you made earlier when somebody calls to complain about how much their insurance is. They're saying, "Oh my gosh, you got a renewal? You should be the happiest person on the planet. I don't see a light at the end of the tunnel in California except for a train. But in Florida, it seems to me like in these states, like those two states, you almost have to, and Louisiana and New York, you almost have to start providing incentives
for carriers to
come back in those states.
A lot of the legislation, that was the goal, is to attract, dangle the carrot to attract other carriers. And I think you're probably looking at a year before some new carriers start coming in there, before we start seeing the effects. Because the thing is, Florida was over litigated. We'd said this over and over. Florida doesn't have a hurricane problem; it has an attorney problem.
Right.
And I think that's very apparent based on the legislation that was passed. That the governor agreed with that as well. A lot of those cases that happened before that are still in court and are still being litigated. So we have to wait on a lot of that to pass. Hopefully they don't have another hurricane this year. But I even think a hurricane hitting Florida to some degree would be good, because the carriers could see, okay, these were the claims we had for Hurricane Michael and the litigation and the lawsuits, and this is what it was after. Oh, that's a significant difference. Yeah, we can model that, But at the same time, I'm not an expert either.
So what is your opinion? We have a lot of agents. Jeremy Powers,
right?
Friend of the podcast, been listening to the podcast, been to two, I believe he came to both One City World Tours. Thank you, Jeremy, for attending. I appreciate that. But I'm seeing him post something on Facebook the other day, and Jeremy Powers might be the most positive outlook guy I've ever met, and he posts this 8-paragraph diatribe about like how bad it is, and I'm having problems keeping my staff motivated.
Yeah, I know that post you're talking about, and about 18,000 insurance agents posted the same thing.
Right. That's what I'm saying.
I think it was written by C.J. Hudson Pillar.
What's your message relative to the other side of that coin, the ditch on the other side of the road, if you will, to all of these agents that feel beat down, that feel, it's like every day is just the way I've explained it to people before, it's like at some point you almost feel like you're working at a damn AT&T customer complaint call center.
So here's the thing.
And your staff does as well.
Right. So here's the thing. So it's very easy to be peacetime generals.
Yep.
It's the generals that we write about. Your son's middle name is Patton. I'm guessing that's for a reason.
Family name.
Okay, I didn't know that. I figured it was Patton.
We're kin to the General Patton.
Oh, you are kin to it. Okay.
Yeah.
So the generals that we write about are the wartime generals, not the peacetime generals.
Right.
So my message to people from a motivational standpoint is, hey, this is what you're built for. This is what Scott and I started this podcast in 2017, smack dab in the middle of a soft market. This is what we talk about when getting your business ready and building processes and that sort of thing. And we're seeing a lot of agencies that are having to divert staff from new business to renewals, to keep renewals.
Playing defense.
Right.
You're looking at one right here.
And so I think when times are good and times are easy, you need to be preparing for times like this. The flip side of that is, and I've often said this, I'm big on self-awareness. I think too many people start agencies who would actually be good number twos at an agency, but they never had a boss or a leader that could help them build around them. And a lot of people just have crappy bosses. So they say, shit, I'm gonna go start an agency so I don't have to deal with this yahoo.
Right.
Hats off to you, but I think there's a lot of folks that, maybe it isn't for you.
Yeah.
Just to be real.
Yeah.
And you need to reach out to an agency and say, hey, let me sell my agency to you. Let's merge. And then I'll come to work for you. Well, do that. The beautiful thing about COVID is you can work for anybody anywhere. You can sell your agency to anybody anywhere. It really opened this industry up. And in fact, I made a piece of content when COVID happened and said that just that right there. So that would be my message to them. But ultimately it's like, look at the successful people that started in the middle of the hardest part of their industry. If you can make it through this, I keep telling my team that if you can make it through right now, if you can make it through right now, you're going to be able to make it through anything. If you can make it through right now, if you can make it through right now, you're going to be able to make it through anything. If you can make it through right now, 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 if you you're going to be fine with things.
Sure.
You're going to come out on the other side that's so good. Not to mention, you got competitors selling their agencies left and right.
Mm-hmm.
Here in Mobile, when we started Portal, there was 4 old school, old money, blue blood family independent insurance agencies in Mobile. Mm-hmm. There's 1 left. Mm-hmm. The other 3 sold.
Right.
There's 1 left. So Portal Insurance, when we come out on the other side of this hard market, we're going to be in really good shape. And I'll be completely honest with you, Scott. So right now, August 2023, we are having our best new business production month we've ever had.
Awesome.
Right now.
Awesome.
Natasha wrote.
I was just about to say, there's a ditch on both sides of this road.
Everything's up for grabs.
If your people are shopping,
right.
If the clients at I Protect Insurance are shopping their insurance,
everybody else is too.
Every other independent and captive agent's clients are doing the same thing.
Everything's up for grabs if you are well positioned to grab stuff.
Right. And now let me ask you this question. Congratulations on new business production, no doubt.
Well, we need it.
So what is Bradley Flowers' process relative to clients who are leaving because I found it somewhere cheaper? Are you running, for instance, at I Protect every Friday at 10 a.m. I get, and our entire team gets, a weekly cancellation report for that week, starting Monday till Friday, and then Friday morning at 10, one of my VAs sends out every client, premium amount, totaled up. Mm-hmm. This is how much canceled. Here's who they are. Here's how much the total premium is. Here's the agent that sold that.
That's a great question.
So what do you do when you get – because here's what I've told agents for 13 years. Had this happen last week. It doesn't matter why they canceled. If their policies in your agency have been canceled, okay, they're gone. They've gone with another agency. You can't put the toothpaste back in the tube, and it's too late at that point if they have truly canceled. I'm not talking about canceled pending. I'm talking about canceled. Mm-hmm. Now, when you reach out to that person, however you do that, there is no, hey, before you just completely go away from I Protect, let us quote you again with somebody else and blah, 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 blah. The game's over.
I hate that so
The game's
much.
over.
Yeah.
I had a guy cancel last week, went with Alpha. I call him. I can say things that other agents can't say to people. It's just my personality. I can get away with things relative.
You can say anything as long as you smile.
As long as I smile, I can pretty much tell anybody anything. So I call this guy. Don't know him from Adam's house cat. I said, brother, let me ask you a question, man. Let's lie, just not to each other. What happened? Yeah. What did we do? And he starts in, your staff is incredible. Harley Self, unbelievable. This is him talking. I was doing work as a contractor at an Alpha agent's office. It was a female. And I built a relationship with her over 3 or 4 weeks of working at her house.
In love.
I didn't get into that, but I thought of that. I'm like, well, what kind of relationship did you build? And through the course of this is him talking. Through the course of that, one day she throws out the seed. Sure. Hey, by the way, I'm an Alpha insurance agent. If I can I'd love to quote your insurance. And she gives him a quote. Now, where the train ran off the tracks is he starts talking about how she saved him money. But again, I already know he sent us a cancellation. He's canceled his policy. It's too late now to do the whole. Let us unwind this whole thing.
The best thing you can do in that situation is what you did. Just be super nice about it. Yeah. If you make it easy for them to leave, they're going to automatically think it's easy for them to come back. You leave that door open. There's an agent here in town that does not do that.
Right.
And he texted a customer, captive agent. He texted a customer that we wrote in text message and said, just so you know, you're not hurting the carrier. You're hurting me and my family.
Wow.
over a $500 BOP.
Wow.
Yeah. So,
wow.
like, if you try to make it difficult or you try to pull moves like that, they're never going to want to come back. So our strategy, our reshop strategy, some of y'all remember last year we did an experiment where we didn't offer reshops to anybody, and retention went up. Now, when we did that experiment,
wait, say that again.
We started an experiment. It was inspired by Matt Namoli, where we basically said, hey, we're not going to reshop any. We're not going to offer any reshops. We only reshop if they're being non-renewed or they request it.
Wait, stop right there. Is the success of not doing that, because right now, I hope you cut that right there, because what you just said, and I hate to be controversial, but it flies in the face of what a lot of people in this industry say.
Let me get to the point. Okay. So we did this. So we had a large. So we've always been an agency that, hey, if you went up 10%, we automatically reshop. That was kind of our value add when we started.
Same here. That's the way we've always been. But 10% is now like 15 to 18%.
Yeah, right. So we had a large amount of reshops June of last year of 2022, and we had a lot of people leaving. We had good retention, but still people leaving, and we were like, the theory is by us calling to offer the reshop, we are drawing their attention to it, which is then prompting them to shop.
You're jostling.
So we said, hey, for 6 months, we're not, unless they're non-renewing or ask for it, we're not reaching out. We're not reshopping. And the intention was never to change our processes to that. It was to conduct an experiment.
Correct.
And we did it with the intention, this kind of gets to your point, throughout the whole 6 months, our intention was, hey, we're going to end up with a best of both worlds. What we end up doing is going to be like a combination of both.
Sure.
So for 6 months, our retention actually went up because our hypothesis was correct. We actually were prompting people to shop. Now, at the end of that 6 months was about when the hard market started, and we were like, hey, we need to actually now go back to offering reshops. That we conducted the experiment. So where we are now is we don't do an automatic, hey, if it went up $300 or 300%, and this is a new thing we're doing, we actually conduct a renewal meeting once a month with the account managers, me and Kenneth, and each producer.
Okay.
And
what
this
are you looking at?
And this is like new. We started this last week.
Right.
Because there's some accounts, one account going up $300 might be cause to shop, but another account going up $300, it may be, hey, they need to keep that policy. That's a good, you know what I mean? The devil you know is better than one you don't. Yeah. And a lot of times it's really the producer, at least in our agency, that really knows that.
Yeah, but you're delivering that message to the producer and the account managers instead of that client that probably needs to know that.
Just listen to me. Sorry. So we're going in agency Zoom and we're going down our renewal, and we look at every renewal for the month.
Okay.
And we're basically giving the producer the reins to say, yes, do that one, no, don't do that one, no, don't do that one, no, don't do that one. Right. And then if we have a situation where somebody's policy did go up but they need to keep it, we are going to be proactive and reach out to them and explain why. That's basically the situation. The other thing we're doing is for personal lines, we built our own personal lines rater, as you and many people know. Right. Our goal with that personal lines rater, and it's already API connected to Agency Zoom, and we're not quite there yet to do this, but for all personal lines, when the renewal hits the Agency Zoom renewal pipeline, it APIs over to our rater, and it runs a quote based on last year's data. So by the time my producers and my account managers even see that there is a renewal, we've got 6 quotes sitting there. So we're using technology to make it more efficient for us to reshop. So there may be a day where, because of the technology that we've invested in and built, we can reshop everybody.
But see, that's a problem. Go back to how we started this podcast, and I was talking about there are some of these carriers, Branch, not on PL Rater.
Right.
So if I create an automation that goes and runs quotes through PL Rater, there may be a Branch and 2 other carriers we have that aren't getting quoted.
That's where RPA comes in play.
I don't know what that is.
Robotic process automation, what we talked with Barth about. So we have robots that we have built that we've trained to run these quotes just as if a human could do it. So we don't have to have the carrier's API to run the quote. Now, we're not there yet. We're close. We're real close. So, like, for example, we have branches on there. We don't have Openly's API, but we're using RPA. So
Can
we
you
can
get
quote,
Openly's API?
they're building it. They're not done with it yet. We're going to get it. But right now, Openly's done through RPA. So we can do an Openly quote on our rater just as if a human did it, but it's a robot and it does it. But there is some carriers that aren't on, you know what I mean? There's some outside of that. But the point is to make it super efficient for people to reach up. Now, the last thing is I get a report every month that is everybody that canceled. And it is segmented by people that we could control, cancellations we can control, i.e. your guy going to alpha, and cancellations we can't. So like home sold. A large percentage of our cancellations are home sold, business acquired, business shut down, those sorts of things. About 30% are controllable cancellations. And on the controllable cancellations, I want to know where they went, why, what they're paying, and do we have an open communication so that, you know what I mean? So what we do, it's same that you're doing but different. When somebody cancels and it's a controllable cancellation, they go into a cancellation pipeline. They get a text message from me. And it's like, hey, it's Bradley with Portal. I just saw you guys canceled, wanted to see what happened, what went wrong. And a lot of people reply to that. Really? And they'll say, hey, so I've got it. Hey, this what? And then when they reply to that, it sends them a text, and it's like, I think it either does it auto or it does the next day. It's like, hey, we'd love an opportunity to quote you in the future. And they always say yes. Unless somebody's super mad about something dumb, they always say yes.
Now, the first text is, this is Bradley. Hey, I was just checking. I saw where you guys canceled. There's something we did wrong. I get that.
And it also, I think it tells them to call me too. It's like, hey, if you'd rather talk on the phone, call me.
Sure.
Most people text.
And then the next automation was what again? I missed that.
It opens the door back up for us to quote them again.
The text does?
Hey, if it's okay, we're going to quote you again. And then that reappears in the pipeline. So this month, I said earlier, we've had our best month. Our number one, I looked at it this morning, our number one new business category is cross-sell, which makes me so proud. Like, that's awesome. We are mining the acre diamonds. But the number two, and I think it was $78,000 in premium, the number two is win back.
So let me ask you this question.
I'm not saying anything just to brag. Like, it's just
no. These agents need to hear all this, right? Because some of them are like, I don't know what they're talking about. If they don't, they need to get in touch with you or I or somebody and help us let us help them figure it out.
Sure, yeah.
But okay, let's back up for a second. The second text is sent what? A day after that first one?
I think it's sent the next day.
Okay. That's the one that was like, hey, hate we lost you guys, but man, we'd love to earn your business.
If there's anything I can do in the process to make this easier, happy to.
Okay. That text goes out. They come back and they're like, sure, Bradley. We'll give we'll see you down the road or whatever. When is the next automation? Is it 45 days before their annual renewal?
So they reappear in our win-back pipeline, I think it's 60 days before whenever the producer account manager X dates it. So when the producer account manager cancels the policy, they select which day they want it to reappear. And when it reappears that day, they get a text from the producer. It's like, hey, just circling back with you like we had talked about.
Is 60 days too long because a lot of them don't have
in this market
the renewal, or should it be 45 days?
I think you should do 60 days, and I think you should set the precedent that they should have their renewal by then. That way you can build a wedge against their current agent. Hey, you should have your renewal. You know what? That son of a bitch hadn't sent me my renewal. You know what I mean?
Yeah, because the reason I asked that question, and it doesn't even feel like – this just feels like a conversation. This doesn't feel like a podcast.
Yeah.
Because I've always said – the perfect secret sauce is if you can hit them either a day or two before they get that renewal, and oh, by the way, that renewal went up on that policy that they left you for by $600, or a day or two after. But insurance is kind of on their mind now because they're like, wait a minute, that son of a bitch, I left Bradley to go over there to John's agency, and the some bitches won't answer the phone. And when they do answer the phone, I feel like I'm at the freaking DMV. And by the way, I just got this renewal yesterday, and it's gone up $600-700.
Yeah.
And now, boom, Bradley hits them with a, hey, it's
By the way,
Bradley with Portal Insurance. We're over here.
So there's a couple things. There's nothing worse than reaching out to someone to win them back or write their business that you've been prospecting, and they've already renewed. Right? That sucks. Yeah, and they, oh man, I'd be willing to.
That's a kick in the nuts.
Yeah,
that's kicking
so
the
I
nuts.
err on the side of caution and go early.
Right.
I'd rather be too early than too late.
Do you reach? Let's say it's 60 days because, like you said, just expectation of
I think
we're
most
getting
of our
close.
stuff. And again, the reason
You
I'm
hit 'em
saying
again,
I think, the reason I say I think is because Kenneth controls all of all. He's over all that now, so he's tweaked stuff. But
You ought to bring him in here and put him on the microphone. Hey, do you hit them again after that 60 days though? Like, let's say that goes out at 60. I
don't think it reaches out again.
Pop again at 30 or
I
something?
don't think so.
Have you tried that?
Now our producers will call. Most people reply to that text. Yeah. Most people will either say piss off or they'll say, yeah, I'm interested.
So here's my last question. We'll move on.
And I got one more article and we got to go.
Okay. My last question is this. Everything we just talked about, which I think was fantastic. These agents got that was real talk right there. That wasn't just podcast. Oh. That was me being generally interested in how you do that.
And we're not perfect. Stuff goes wrong. Like, we have issues just like everybody else. We just have different issues.
But you just said different issues. My question was going to be, does all of that work? Because as I always joke with you, and if it really does make you mad, tell me and I won't joke with you about it anymore, but I always talk about how Bradley sells insurance policies from Ray's Used Tires Accounting and insurance carrier.
That. Yeah.
Does all of that work because all you some bitches down here on the Gulf Coast have the same damn insurance to sell?
Pretty much.
Versus the guy or girl that right now is listening to this podcast in the middle of freaking Nebraska.
Right.
Where their agency was started in 1964, and maybe they've got some carriers that everybody down the street doesn't have, or vice versa.
I think you need to change, and that's the case, you just need to change your messaging.
Yeah.
You know what I mean?
Yeah. But you see where I'm going with that.
Yeah, for
Does
sure.
that work because everybody down here's got the same stuff?
I don't know that it works because of it, but it certainly helps when I can tell. I mean, we tell our customers, hey, look, by the way,
everybody here's got the same stuff.
We all have the same carriers, so you need to work with an agency that's efficient, that you know can take care of you. And if I can just be confident for a minute, there ain't nobody here that's as efficient as we are.
I believe that.
I spoke to the Alabama Big I, a group of 400 agency owners, and said, who here is using a CRM that's not your agency management system? And exactly 0 hands went up.
I mean, I'm talking to a guy right now that at 8 a.m. yesterday, I was getting out of the shower and wiping myself off with a towel, and I look over at my phone, and I see a notification. It was a text message from Bradley. I click the notification, standing there in the bathroom, butt-ass naked, and I look at the notification, and my podcast co-host asked me, hey, I'm ordering lunch at Chick-fil-A right now. And what do you want?
I should have clarified. It wasn't.
And I'm thinking, we're talking about an automation going out at 60 days prior to renewal. I mean, there's nothing more Bradley Flowers than sending me a message at 7:58 in the morning. What do you want for lunch at Chick-fil-A
you want me to tell
for
you,
noontime
you
today?
Something even more crazy that I do.
Yeah, you've got a few screws loose. I'm gonna be honest with you, dude.
Let me tell you something else.
Your OCD schedule thing.
No, it's not OCD. It's just a schedule. It's the reason I don't like going bar hopping.
I want to bring a psychologist in here. I think she's gonna
bring
argue.
Laura Bruno in. It's so. It's the
Well, I don't
reason-
go bar hopping because I'm 50. You know, people go,
Right.
Scott, I thought you'd be like this big drinker. Like last night, we go to you and our Adam, our podcast guest for Cake. Y'all drank a
couple bourbons.
couple bourbons. You know, had a good nice glass of bourbon. I don't drink, and I'm sure he's like, man, this guy's supposed to be somewhat. I've reached a point in my life at 51. If I sit there and I drink 3 or 4 bourbons on the rocks, splash of water, I feel like shit all day today. I can't do this podcast very well because it takes me about 2 days to get over it when I decide to get drunk nowadays.
You know what I think it is?
Me getting old.
No, I'm talking about my situation. We're talking about me, Scott.
Yeah, I want to do all this.
So, I grew up working with my dad, and he's a contractor, and it wasn't a nepotism situation.
It was actually
it was the opposite.
I know your dad, and I know guys like your dad.
Yeah,
and I compare them to the old high school football coach whose son plays for him, and he's harder on his son. Brett Favre, perfect example.
Yeah.
His dad was 10 times harder on Brett Favre than any player on that team.
So a lot of stuff I think derives from childhood. And so I grew up, 12, 13, 14 years old working with my dad. When we got into the truck in the morning to go to the job, he never told us where we were going. All day long, we'd hit 2 or 3 jobs in a day.
Would you ask?
If you asked, you didn't ask.
Yeah, don't worry about where we're going.
Exactly.
Can I ask you another question?
I think for me, it's the reason I don't like going out to bars or going out drinking. I like drinking. I don't like going out drinking because you never know where you're going to go.
Right.
Like we got to have a plan. Like I need to know we're going to go here, and then at 8:00 we're going to leave. You can't do that when you go out drinking. You know what I mean? And ultimately, somebody's like, "Let's go to such and such." You know what I mean?
Right.
And so.
Well, wait. So you're out with Scott because you and I'm the exact opposite of that.
Right.
I'm the guy that I don't care where we go. Let's just you tell me where we're gonna go. We're gonna go. If you're out with Scott and we said, and you and I and Laurel and Kim are out together at El Poppy having dinner, and we scheduled that 2 days in advance. You knew we were going to be there at 6:30, 45, and dinner takes approximately 1 hour.
Session,
dinner takes approximately 1.5 hours, and we're chopping it up, having a nice time, laughing, cutting up. And I say to you, because I've had a couple margaritas, hey, let's walk over here to the blah, blah, blah bar, which is literally 2 buildings down. Does that throw you into a tailspin?
I will go, but I don't like it.
Why?
I just gotta have a plan, man.
Okay.
It's just a weird.
What you're talking about right now is like the epitome of self-awareness.
Yeah.
And if I know that, then I can control. And if Kim says, "Let's go down to the," I'm like,
so you know what I do. You know what I? Well, you know what? No, what I do is when there's going to be a night like that, I just be the one that takes the initiative and plans.
Right.
And says, "Hey guys, we can go here. Let's do." You know what I mean?
Right.
So, but
I'm proud of you for knowing that.
I'm a scheduled routine. So I'll tell you something even crazier that I do. I track my calories.
Crazier than this?
I track my calories.
Oh no. So when you ordered the chicken sandwich yesterday at 7:58 a.m. that I thought you were literally going to pick up, and I was going to get here at 8:20,
pre-ordering it,
and there was going to be Chick-fil-A bags on the table, and I'm thinking to myself, I texted him back. I said, Bradley, you do realize you are literally going to be eating a Lowe's refrigerator box for lunch tomorrow.
You know what's even funnier? Because I know what your Chick-fil-A order is, there's Chick-fil-A sitting on the other side of the door right now.
Seriously?
Yeah.
Seriously?
Yeah.
Keep going with this. Well, you were about to say there's something crazier than all of this shit.
What I do,
beyond freaking unbelievable.
I track my calories on MyFitnessPal.
Is that Chick-fil-A on the other side of that door on that?
Not yet. I didn't do it this morning.
So you don't do it until you're eating it?
No. Usually what I do, and I did this yesterday, the first thing I do when I wake up is I grab my phone and I say, all right, what are we going to eat today? And I punch it in. And so like yesterday, I punched in. So what I get at Chick-fil-A, I get 2 number 12s, just the entree. You're a workout guy. 2 number 12s, just the entree. It's 700 calories, 80 grams of protein. Keeps you full all day long, and it's delicious. So that's what I ate for lunch yesterday. So that's 700 calories. I knew I was going to get an 8-ounce filet, which was about 600 calories, and the asparagus, and I had 369 calories left over. So therefore, throughout the day,
What'd you do about that
throughout
corn skillet?
Throughout the day, I know how many calories I have left over. A glass of bourbon's 80 calories. That's 160. I wanted the corn skillet as a snack so I can eat it because I have room for it guilt-free.
Oh, my God.
I think too many people snack and it makes them feel bad, right? They feel guilty for snacking, which then makes them snack more because they feel bad, right? You agree with me. And so by me knowing how many calories I have left over, I'm good.
Well, you just pissed me off.
Because he's agreeing with me?
No. No, it's because he's like, how old are you? I mean, this guy looks like a Greek Adonis.
He does. He
literally could he could
Scott
probably
tried to
call
play
my wife and
matchmaker
she would drive
yesterday.
down here to go to his
So
house.
let me go through one more article.
And he can eat any damn thing. He can eat, a bag of Snickers bars and then follow that up with 6 milkshakes and probably not gain a pound.
Right. Meanwhile, we do that and our butt jiggles for a
100%.
week.
So Bradley, Bradley,
Yeah.
you got to help me out here. This is the most unbelievable podcast I've ever done. Because what was the guy's name? The crazy guy that was the airplane guy, Howard Hughes.
Yeah.
My podcast host is literally
I'm not drinking
turning
Monier
into
like
Howard Hughes. When did this get to this? How did this get to this?
I don't know.
Is it always been since I've known you?
Pretty much.
You just hide it?
I guess. I don't know.
Because I didn't know any of. I knew the times we've been together places. It was always like, hey, do y'all want to go blah 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 blah, and let's go here and da. But I had no idea it was this. What do we do?
I don't know. What do you want to do?
I think you need therapy of some kind. This is unbelievable. So okay.
I like it.
So
I like being scheduled.
So
You want to see what my calendar looks like tomorrow?
So
look at this.
This plays into your automation stuff, right? You have to have everything in your agency automated to feel like you've got all your bases covered.
Now, I don't want you to read any of this.
I don't want to read any of that.
But that's my calendar tomorrow.
And I can't even see that. But
it's scheduled out 15 minutes.
Weekly automation. What did that say?
That's a meeting, but it's literally.
And so your automations are more directed towards your inner Bradley feeling okay with not feeling out of control.
Correct.
Than it has anything to do with the customer.
Correct.
This is the most unbelievable podcast. We should be on Joe Rogan
We've got to
now.
shut it down because Wesley Anderson's waiting in the lobby.
Okay. Guys,
that was fun, though. I actually enjoyed talking about it.
Guys, I've got a lot to process and a 6-hour drive home today to do it with. But
Scott's going to have me diagnosed by the time
I am going to be on Google so fast when we get off this podcast to find out what's wrong with you. But is that Chick-fil-A really outside that door?
I told her to order it at 11, so it should be here.
Oh. Guys, you were listening to the Insurance Guys podcast. My whole life just changed. I don't know what to do at this point. I'm going to have to do a lot of self-reflection. And obviously, for a number of years, people have always said in group meetings, podcasts, phone calls, there have never been two people more different than Bradley Flowers and Scott Howell. And folks, let me say this. That is the truest statement that has ever been spoken in the English language since it was created. My name is Scott Howell. This is Bradley Flowers. And you are listening to the Insurance Guys podcast. We love each and every one of you. I don't even know how to end this podcast, so I'm going to say
you got to do another one, right?
Hope you guys have a great week. Remember this, guys. Remember this. We're all going through this together. And it's a once-in-a-career situation, hopefully. But we're going to get through this. It's going to be okay. And hope you guys have a great week. We'll talk to you real soon. Take care.